Hi, and welcome to another video on Trader's Edge. Today, I'm going to explain you how to spot, analyze, and trade with order blocks, one of the strongest structures in the market, often performing better than simple support and resistance. So let's not waste any time and let's get started. First, we are going to learn how to spot the order blocks. Technically, you can't see any order blocks because they are only visible for the institutional traders with large amounts of money that pretty much decide what price does. So we, as retail traders, are trying to think as much like them to profit like them. The actual process of what is happening with order blocks is too complicated to explain in just one video, so we're just going to look at how to detect them. There are actually two ways on how to look at order blocks. Scenario 1. We look out for spots before price has made big or even huge moves, for example, downwards, making a trend reversal. Now, determining the actual order block zone is not very easy. There are multiple ways to do this. Generally, you take the upper wick of the uppermost candle or even taking the whole uppermost candle as order block zone. Now, order blocks won't always affect price, especially if price hasn't been there for a long time, but they can. And price will more likely get rejected off of the order block zone if the initial bearish movement is big. Now, if you're an aggressive trader, you can sell as soon as price moves into the order block zone. But I'd recommend either going on a lower time frame and look how price reacts to the zone there, for example, by plotting out a Fibonacci retracement and looking that price bounces somewhere in the middle, Fibonacci zones. But in this case, taking a silver bullet entry would have been the most reasonable decision. First, price bounces off the actual order block, creating a fair value gap, then retraced to it and continued to go down. Watch my other video about fair value gaps. They are as important as order blocks. Now let's look at a bullish example. Here we can see price made a huge move upwards and letting us detect an order block. In this case, I'm going to take the lowest candle as the proportions for the order block and extend it to the right. Then price came back down, retested the order block, and reversed to the upside. Here, I set my take profit at the next major bearish order block. Scenario 2. These aren't the normal order blocks you might be used to, but these have been profitable for me in the past, so I'm still going to show you them. In this case, the order block looks a bit different, a lot smaller, but can have the same impact on price. We need to be either in an up or down trend. Let's now look at a bullish order block example and say price is first going down. Then we want to see a relatively big move upwards. For this, you can also drop down to a lower time frame. This move can also be enough if a big green candle closes above a red candle. Then price will go a bit up, and we wait until price comes down again into the possible order block zone. If it bounces off of the zone, this is good, indicating there actually is an order block. For the entry, I would go on the safe side and would wait for price to close above the high of first move after the order block, then I would go long. Set the stop loss just a bit below the actual order block, because in this scenario, I am very strict with my rules, and if price would end up going below the order block, I cancel the whole setup and would see it as a failed order block. As take profit, I'd usually take another but bearish order block or a level with buy-side liquidity. Now, before you go trade and backtest these conditions, you might ask yourself what the difference between simple support and resistance and an order block is. Generally, they are all the same. They are seen as key levels. Yes, there are some minor differences, for example, that support and resistance, levels often used to swap their function. So they go from support to resistance and from resistance to support, and so on. Order blocks, for example, don't tend to do this. Anyway, I hope you learned something valuable today. So it would be in everyone's interest for you to like and subscribe so more and more people can learn new trading structures and setups and get a profitable trader.